All right, welcome to Talking Investing. Today I want to talk about Plug Power, stock ticker PLUG. This was a members only video and the members voted to release it to the public. So I'm going to play this just like it was for the members. If you're new to the channel, please remember to subscribe and hit the notification bell. And if you want to become a member, you can press the join button on the YouTube page and you'll get videos like this as well as other original content. And we also do a members only live stream every Tuesday after the market closes, and members get to pick a video for me to do once a week. So we'd love to have you join us. So what follows is the members only plug video that I did about a week ago. So enjoy. All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. This is a members only video. This is the video you guys requested 2 weeks ago on the live stream. The company is Plug Power, stock ticker PLUG. This one's a hydrogen fuel play, and I want to talk about hydrogen a little bit and then get into what Plug does and talk about the potential future of this company. You guys picked this one, but this is actually a favorite of mine. So I think hydrogen is just in its early stages. The technology's been around a while, but they've made some significant breakthroughs lately. And I do think this is going to be a big part of the energy grid in the future. You know, it's a few steps behind some of the other things that we talk about, but in the background, it's further along than most people think. And Plug is doing a lot of business. They're going to have over $1 billion of sales next year. So this is not some fledgling startup company. They're deep into their sales. They're not yet to profitability, but we'll get to all that. So right now, Plug's trading at $15.19. That's an $8.8 billion market cap. This is just a little bit off of their 52-week lows. When we get to the chart, you'll see it is at a line of support right now. So we'll talk about that later. Okay, let's just do a quick overview of what Plug is and what hydrogen power is. Okay, building the clean hydrogen economy with hydrogen fuel. This is off of Plug's website. This is their hydrogen page. Hydrogen is what they do. Hydrogen fuel plays an important role in the quest for sustainable, efficient energy solutions in the global move to the electrification of everything. So I like this next sentence, leveraging the most abundant element in the universe. So people forget that, but you know, obviously that speaks for itself. Hydrogen is the most abundant element, and we do have ways of harnessing it. So this is technology that already exists. This is what Plug is already doing. So they say, we are the largest buyer of liquid hydrogen, having built and operated a hydrogen highway across North America. We continue to innovate end-to-end hydrogen fuel solutions, harnessing its unique capabilities. Okay, just a couple quick things about the hydrogen market so you don't have to take my word for it, although of course this is not financial advice and you guys need to do your own due diligence. But here's something from Goldman Sachs. Hydrogen generation could grow into a $1 trillion per year market cap. So I won't read you the whole article, but to put things in perspective, you know, and again, this goes out maybe 20 years or 30 years from now. This is not necessarily the next thing. You know, none of this is replacing oil tomorrow. But the infrastructure is already being built out, and they're finding more ways to use the application of hydrogen. They're actually finding ways to use it to fuel up electric vehicles at this point. So this will be a big part of the infrastructure, in my opinion. So $1 trillion per year market cap. So that's a total addressable market. I don't know how far off that is, but you can see Goldman Sachs does have their eye on this. The other big thing worth knowing is in the United States, we passed what's called the Inflation Reduction Act. Here's why this is significant. The bill provides $369 billion in funding for shoring up American energy security, including tax credits for hydrogen production and storage. So that goes exactly to what Plug does. Plug is the biggest player in this hydrogen production and storage game. So these tax credits, they are going to be the direct beneficiary of. And this is critical for them because you're going to see when we get to their financial statements, they're going to need these to bridge the gap to get from where they are right now, which is not making profit, to becoming profitable. And that's a critical stage, right? They're no longer pre-revenue. They have a significant amount of revenue, but they're pre-profit at this point. So they do expect by 2024 to be making a profit. These tax credits will be a part of what bridges the gap in the middle for them to get there. Okay, Plug Power, making clean hydrogen adoption a reality today. I'm not going to spend 10 minutes digging into this website and letting you know what Plug does. You guys can do that on your own if you're interested in this. There's an awful lot of information in here, but you're going to see they do a lot of things and there's a lot of sources of revenue. So that is key to me. So what I want to do is instead, I want to shift to the balance sheet and the income statement to take a look at what these guys are doing financially and talk about what's going to happen in the future. They just released their Q3 earnings. That was a bit of a disappointment, but it looks to me like there are positive things to come in the future. So let's get to the balance sheet. Okay, Plug Power Inc. and subsidiaries consolidated balance sheet. This is as of September 30th, 2022. So this is Q3 of 2022. They just put this out. So I like to look at the balance sheet. The first thing I want to understand is, does this company have the cash to get where it's going, or are they deep in debt and reliant on at the market offerings and, potentially having a liquidity problem? So that is always something that I check out with a company. If you don't understand that piece of a company's puzzle, then you really don't have enough information to buy or sell a stock, in my opinion. Okay, so cash and cash equivalents, they had $1.7 billion. Total current assets, $3.6 billion. So that's a healthy amount, particularly if we compare it to current liabilities. So their total current liabilities are $599 million. So obviously they have more than triple that just in cash, and they have a 6-to-1 current ratio. That is to say they have 6 times as many current assets as current liabilities. So that's a good thing. So if you look at their long-term liabilities, they have some long-term liabilities as well. Total liabilities is $1.6 billion. So that means they have about $1 billion in long-term liabilities. But the good news, again, is their total liabilities is $1.6 billion. That's less than just the cash they have, never mind the current assets that they have. So from that perspective, from a liquidity standpoint and a debt standpoint, this company is in a good situation, and I think they have more than enough to get where they're going. So I do not expect to see them run into any liquidity problems. I don't see them having to raise capital, dilute stock, any of that kind of stuff. Okay, so now I want to look at the income statement real quick. Net revenue. So you'll see total net revenue is $188 million in the quarter. This is the 3 months ended September 30th. So for the 9 months ended September 30th, total revenue was $480 million. So they are on pace in 2023. They're projecting to have over $1 billion of revenue in that year. You're going to see their annual revenue growth is massive. I will tell you, these earnings fell short. So the market always has expectations on the top line and the bottom line going into earnings season. So they did miss on the top line and the bottom line. However, with the additional information that they provided and what's coming ahead with their backlog and these types of things that we're going to take a look at, I think they are in an extremely good situation. But you're going to see right here, I want to point out one of the problems this company has. And then let's point out what they say they're going to do about it, because this is a clear issue. Their net revenue is $188 million in the quarter. Their total cost of revenue is $234 million. So before we even get into overhead and interest and all that stuff, they're losing money. Their gross profit is negative. So that's obviously a problem. That needs to be fixed. They have addressed that, and I'm going to go through that, and they have a pathway to a positive gross profit and to profitability. But I'll show you where their problem really is. It's in 2 spots. Power purchase agreements. So revenue for power purchase agreements was $9.5 million. Fuel delivered to customers and related equipment was $12 million. So, that's around $21 million of revenue for those 2 things. You'll see cost of sales, power purchase agreements, $35 million. Fuel delivered to customers and related equipment, $53 million. That's about $88 million. So they lost a monumental amount of money selling the fuel itself. So this has a lot to do with the legacy deals that they have. They're switching all that over, and in addition to that, they're getting some tax credits that's going to offset all of this. So that's their path to profitability. Let's take a look at that. Okay, this is from their investor presentation. The passage of Inflation Reduction Act, transformational event and accelerates Plug's fuel margin expansion. Plug's third-party sources of hydrogen coupled with increasing natural gas prices has continued to pressure our hydrogen fuel business. So we saw they're losing money from scratch on this part of their business. So with the second half of 2022 likely representing the peak of hydrogen molecule costs for Plug, the business should see a step change throughout 2023 as our green hydrogen production facilities come online. So that's the first thing. They have new facilities coming online. They're making large hydrogen production facilities, so that's going to drastically reduce their costs. Plug's hydrogen production coupled with the $3 per kilogram production tax credit, so that is what is part of the Inflation Reduction Act. This is the tax credit that hydrogen companies are going to get for producing hydrogen. So that $3 per kilogram is meaningful to them, and you'll see they say This should enable the fuel business to exit 2023 with break-even run rate. So by the end of next year, break even, despite continued mix of higher-priced third-party legacy contracts. We expect further gross margin expansion above 30% as additional green hydrogen plants come online in 2024 and beyond. So you can see, it looks like with the steps they're taking, they're going to go from losing money to making money, from 2022 to 2023, break even, 2024, make money. So obviously that is crucially important. This paragraph here and this part of their presentation and this part of their story is critical. They need to do this. If selling fuel is going to be a loss, then, that changes their business model. But it looks like they have the answer here, so only time is going to tell, but they're creating their own hydrogen production facility, and that is how they're going to really accomplish the lower costs. Okay, so here, this is from their investor letter relating to Q3 earnings. They have a section called Large-Scale Stationary Application, $350 billion total addressable market in the U.S. So this goes back to the trillion-dollar global market that Goldman Sachs is talking about. They're talking about a $350 billion total addressable market just in the U.S. Plug has been focused on our large-scale stationary production that can be used in multiple applications, including data center backup, 24/7 stationary power, and peaking solutions. We are pleased to have validated a 3-megawatt fuel cell system for stationary power alongside data center customer Microsoft, and expect the delivery of our first unit for on-site testing in the first quarter of 2023. This is a landmark event as our large-scale stationary power solutions can displace diesel power generators and other fossil fuel applications. In 2023, we expect to ship 20 to 30 megawatts in this application, with anticipated shipments of more than 200 megawatts in 2024. So another way they're growing their business, a more profitable part of their business. So just to round out what this company does, you can see this is literally a hydrogen fueling station. So these already exist. They're building and selling these. You can use it to actually power a vehicle, but in addition to that, it's highly useful for energy storage. So those are the two pieces of the puzzle that make this a potentially huge market. Okay, keeping pace with hydrogen growth, Plug's customer demand for hydrogen has grown 10 times in 5 years, nearly a 200% annual growth rate. Now, going forward, it looks like that's going to be more like a 60 or 70% annual growth rate, but that is a massive annual growth rate. From a market perspective, McKinsey expects hydrogen will provide 18% of total global energy by 2050. So, there's some projections. You're going to get projections of all kind, but it's already happening. The hydrogen fuel cells store energy, and this is an efficient way to store energy. They can even actually take an electric vehicle fueling station and use hydrogen fuel cells to charge the electric cars. So there's all kinds of applications here that are already readily available. Okay, again, if you want to learn more about that, you can do a deeper dive on their website. I want to go to the chart and just finish up and talk about the stock price. Okay, this is Plug on the 1 week time frame. So this is a, larger scale view of what's happening here. There's a red line that I've drawn. This dates back to November of the year 2020. So that is now 2 full years ago. So you'll see I've drawn that as a line of support because although Plug has had some massive run-ups, you'll see here in the June-July area of 2022, it tested these lows. And now again, just a few days ago, in late October, it tested this low again, and it's pretty close to that low right now, but not necessarily right on it. So to me, this is an extremely strong 2-year line of support. And on the flip side, you can see there have been massive run-ups. Now, the first one was in January and February of 2021. I kind of discount that, as you guys know from watching the channel. That was a period of time that was a little bit out of control, and some small cap high growth stocks got to ridiculous numbers. But more realistically, 1 year ago in November, this was about a $45 stock. Again, it's at $15 right now. Even in August of this year, so just a few months ago, just 3 months ago, this stock was over $30. So, it's down over 50% just since August. So there is lots of room to the upside. And again, you can see, I'm going to zoom in. If we look at the 1-day time frame, you'll see this red line. This is the red line that dates back to November of 2020. So this line has held very strong. We're now in the 1-day time frame. We spent 1 day below the line, and that set the 52-week low. We haven't revisited it since. So we are, though, however, hanging around the lows. So to me, with all the news that's come out, as soon as the stock market gets a little bit healthy, at some point I'm expecting a relief rally in the market. I don't know when that's going to be. So this could go sideways for a while, but it does look like we found a line of support. So the risk reward on this one looks like it makes a lot of sense sense. There's always risk, and obviously, you know, just because there's a line of support, that doesn't mean that's the lowest it could ever go. It could take that out in the future as well, but we've seen this stock at $30, which is a 100% increase just in the last 3 months. We've seen it at $45 a year ago. That would be triple its current price. So for me, this is a very good risk reward. I like this industry. I like hydrogen. I do think that it doesn't get talked about a lot, but it is going to be a big part of the energy solution. So that's just my opinion. Again, this is not financial advice, so please do your own due diligence. I definitely enjoyed looking into this one. I'm a big fan of hydropower. I'm looking forward to seeing more companies like this in the future. So good pick, everybody. Thanks again for being a member, and thanks so much for watching. So I will see you in the next video.